Good afternoon, everyone that has joined us live on the call. So glad to have you here. My name is Renee Daggett, and I have two of our staff members, Sabrina Wilcox, she's our tax manager, and then Nikki Mulder, she is our bookkeeping manager. And I'm just so glad to have all of you clients on the call today. We're going to be talking about home office deduction. And I'm just going to set an expectation that I just want to educate you, answer your questions that you might have about home office. But before we kind of dive into the details here, let me make another click on this side. You guys know who we are. And I just introduced Nikki and Sabrina. I also want to tell you that this is for educational purposes only. Some of you are engaged with us on the bookkeeping side and we don't do your taxes. Some of you, we do your taxes and we don't do your bookkeeping. And then there's a few of you that we do both bookkeeping and taxes and payroll. So this is meant for educational purposes. And do ask questions at the end, but for your specific situation, probably be best to have one-on-one questions. At the end of this presentation, which is going to be super short, by the way, you can ask us anything. That's why I have Sabrina and Nikki on the line. So if it's tax related, Sabrina will answer that question. If it's bookkeeping, payroll, sales tax related, Nikki will answer those questions. We are here for you, so there'll be an opportunity for you to ask us anything that you want to at the very end. So for home office deductions, what are we going to talk about? I'm going to tell you what are the requirements in order to qualify for a home office. Specifically, I'm going to talk about entities. I'm going to talk about how is it calculated, what you need to do, and what we will do for you. I'm going to give you an idea of which expenses are included in the home office deduction. And I'm going to talk about entities again, because all of you on the line, you have different entities. I'm going to briefly mention depreciation. And there is a simplified method and a regular method. So I'm going to plant a seed about what qualifies for the simplified method. And then I'm going to talk about how your home office affects your business miles. So let's get started. So let's talk about how to qualify for the home office deduction. Typically, there are two things that you have to meet in order to qualify. It has to be regularly used for your home office. So that does not mean occasional use. It doesn't mean incidental use. It means regular. What is regular? Kind of subjective, but you have to be in the office on a regular basis. Reconciling your bank statement once a month is a regular occurrence. Meeting with clients is a regular occurrence. The second rule, which is more difficult to qualify for, is it has to be exclusively used for business. So if you think of your home and you clear off your dining room table and you say, okay, this is where I'm going to have my home office, that will not qualify because maybe you entertain family and friends on Thanksgiving. If there's any time that you have personal use of that area, that's going to automatically disqualify you from exclusive use. So that means you can't count the area that you're sitting on the couch because you watch TV with your family on the couch. I'm just kind of making something up. So if there's anything that you're commingling, if you're paying personal bills on your desk, technically that is not exclusive use. So the IRS is very strict when it comes to home office. And here's the reason why. Because many taxpayers abuse the home office and they are not exclusively using that. So regularly used, exclusively used. Now, this third bullet point here is called principal place of business. So in IRS language, they look at, is your home office your principal place of business? When you talk about principal place of business, it has to be regularly used and exclusively used. But what it really is talking about is, where do you do the bulk of your administrative work, your management activities? Do you bill clients from home? Do you do your books from home? Do you order supplies? If you're a pianist, do you practice at home? Do you schedule appointments? Do you write reports? Where is the bulk of your administrative tasks done? Is it done at your home office, or is it done at your brick and mortar office if you have one? And so this is going to be important when we talk about business miles. So kind of keep that in mind. So how is this calculated? How is the home office calculated? It's basically based on percentage of business use. So what does this mean in English? What we have to calculate is your total square footage of your home divided by the total square footage of exclusively used, regularly used business space. And here are a couple tips that I want to remind you on how it's calculated. So if we do your taxes, all you have to do is provide us the total square footage of your home and the total square footage of the business portion. We will calculate the business percentage. That's super important because it just will be easier on you. Clients will give us, the percentage, and we have to put that number in our tax software. The other thing that you need to know is all of your home office expenses that are, a percentage of your home need to be paid out of your personal bank account. And this is for all entities. So if you're a sole proprietor, filing a Schedule C, if you are an S Corp, if you are a C Corp, all of your home office expenses must, or it's easier, to be paid out of your personal account. And I'll talk about what expenses qualify in a moment, but paid out of a personal account. And if you are an S Corp or a C Corp, what happens is we total up what your business percentage is, and we figure out what you contributed to the corporation. An S Corp, it's going to go against your distributions. The C Corp is going to be some money that you contributed. And we do that calculation on the side, and then we do a journal entry, and your bookkeeper will enter in those journal entries based on the tax return and that home office calculation. So let us do the calculation as far as putting that in the tax software. Just give us the total numbers and the home office square footage. So what qualifies as a home office deduction? So here's a screenshot. Hopefully you can see it okay. I'll kind of talk you through it. What we need you to do, if we do your taxes, what we need you to do is give us totals of what you spent for rent, not the mortgage for your home. So if we do your personal return, we're going to have the mortgage interest that you paid. We're going to have the real estate taxes that you paid. So we're going to be able to grab that from there. But if you don't own your home, we need your total rent that you paid personally out of your personal bank accounts. And then it's gas, electricity, water, garbage, homeowners insurance, cleaning. Say you hired somebody to clean your home and they cleaned the whole home. We need the total amount that was spent for cleaning. If you are in an association, HOA dues, gardening, and then any general repairs that you do on your home. Now, the last item there is any repairs or maintenance done on that specific area. So let's say you have one room in your home that is exclusively regularly used for business. If you paint that room, those are what is called direct expenses, rather than if you paint the house, outside of the house, then that's a business percentage portion. So anything directly related to that home office is calculated differently on the tax return versus something that you do to the whole home there. Next, I want to talk about depreciation. Sometimes people will say, oh, I don't want to take a home office because my prior tax preparer said that it's a red flag and I have to recapture depreciation. Yes, you do have to recapture depreciation. However, sometimes people make it out to be bigger than it is. But again, we have to look at your specific situation. And really what it comes down to is if you know we have to recapture depreciation, then a lot of times it's a bigger deal in your head than it really is on paper. But let me talk you through this in English, and I'm just going to kind of skim over it. So if you take a home office, you can also take a deduction for depreciation on your home. It's something that you're not paying out like homeowners insurance, but you get a deduction for. The best thing about getting a deduction for depreciation, it reduces your ordinary income, which is a fantastic thing, especially like for sole proprietors, that the home office actually reduces your self-employment tax, which is far out fantastic, and this depreciation will reduce it. Great. However, when you do sell your home, you have to recapture, which is a fancy word for add back, the amount that you got the deduction for in that depreciation, and you have to pay taxes on that amount. But if you think about it, you know, if your home office is 3% of your home, again, you're kind of making something big in your mind that it's 3% and the capital gains most likely is going to be a lower tax percentage than your personal income tax anyway. So I just kind of wanted to give you an overview on that. If you're worried about it, we can talk to you specifically about your situation. But I just wanted to let you know that is part of the formula in the benefits of having a home office, but also the consequences of taking that deduction for the home office. I wanted to mention something that's called a simplified method. So what I've been talking about so far is called the regular method. The IRS came out with a simplified method. Oh my goodness. I don't remember if it was 2011 or 2013. It's been a while. And how the IRS calculates the simplified method is basically taking your square footage and giving you a deduction of $5 per square foot. And they do have a maximum of 300 square feet or a total deduction maximum amount of $1,500. So this formula is actually great if you don't have the bandwidth to add up your insurance and your repairs and all of those items that you're spending on your home for us to then calculate the business percentage, because it's an easy, straight calculation, $5 per square foot. There's no recapture of depreciation. It's a really great, easy formula. However, for those of you that we've been doing your taxes for quite a few years, I want you to know that we actually look at both methods and put in the method that's best for you. And Sabrina could probably correct me if I'm wrong, but I'm thinking 9.5% out of 10, it's better to take the regular method to deduct that. So just keep in mind we can do the simplified method. The last thing that I want to talk about for home office is how your home office affects actually your auto miles. So remember when I was talking about the principal place of business, if you qualify for having your principal place of business be your home office rather than the brick and mortar office, the cool thing is when you leave your home office and travel to see a client, let's say, those miles from your home office to that client meeting are now deductible. If your home office does not qualify as a principal place of business, the miles between your home and meeting that client are not deductible. They are considered commuting. And then what happens is if you meet that client and then run to Staples to get office supplies, the only miles that are deductible are from the client meeting to Staples. And so just be aware of how advantageous then your mileage deduction can go up based on if you qualify for that principal place of business. I told you that this would be a short presentation. This is technically my last slide. I have a couple other slides to show you, but I just wanted to give you an overview of home office so that you can ask specific questions of your tax preparer. So many times you don't even know what to ask. And so we wanted just to educate you, give you food for thought, plant a seed, make sure you are recording all those expenses in order for us to give you the maximum deduction for your home office. Or perhaps if you've been nervous about taking the home office deduction, this maybe eases your fears for that. And most of you know me on the call. I am all about being passionate about taxes and bookkeeping and having your financial house in order. And I know taxes are so much fun that I have to share a cartoon with you. So get your pen out. You're going to write a letter to the IRS that says, "Dear IRS, I would like to cancel my subscription. Please remove my name from your mailing list." And so because accountants are hilarious, that is my one and only joke. I wanted to make sure you guys are aware of some free stuff that Adminbooks offers. We send out a newsletter 2-3 times a month. I will tell you on purpose, I have them be educational, giving you tips, reminders. If you do not receive our newsletter, email us, tell us, because I want to be able to share that information with you. I want to make sure you get every tax deduction allowed, and part of this is just educating you on what's available or tax reform and the new changes. So make sure you're getting our newsletters. Also, make sure you're connecting with us on our business Facebook page. Even if you're not a Facebook person, you can go directly to my business page. If you are a Facebook person, I highly recommend connecting with me on my personal page as well as the business page, because I post stuff on my personal page. Like I posted about today's event and said client only, membership has its privileges. So I want to be able to share that information with you and tips I give. And actually I was doing Facebook Live videos, and I actually did one on home office in February. So I want you to have all that access if you choose to do so. Speaking of free stuff, this summer, Sabrina, Misty, and I did 3 webinars on tax reform. I'm so glad you're on the call because there are some major things happening, not only on the personal side, but for businesses. Big changes. I mean, these are changes that haven't happened in more than 30 years, Ronald Reagan era, right? And my team and I have just been spending time educating ourselves on what those changes are. We did 3 webinars, and Sabrina and Misty and I recorded those, and they are on my website for you to look at. So I have the link here in the PowerPoint presentation. They're on my website. Thank you, Tracy Foster Pike, for doing my fantastic new website. But you can go on there under taxes and click on it. You do have to enter in your name and email, but then you can watch the webinar right there. And they're probably 30 minutes long. So check that out if you haven't done so. There's a lot of great information there. And again, we're just wanting to plant seeds so that you guys are proactive for the upcoming tax season. Like I said, some of you we only do taxes for, some of you only do bookkeeping for and payroll. We are all about education. So if you need a tax projection before the year ends, we are meeting with clients right now so that there are no surprises. So I just want to make sure you guys know that we are a one-stop shop. Something else I wanted to let you guys know about, I've been doing these monthly webinars. They're very short. Our next webinar is going to be how to read and interpret financial statements, and it's going to be based on your entity. The key is your chart of accounts, and so Sabrina and Nikki will be on the line next month, Thursday, October 25th at 3 p.m. Pacific Standard Time. You do need to register because I only have so many slots on this GoToMeeting. So email support@adminbooks.com and make sure that you are on that list so that we can send you the link to connect for the webinar. And here is our contact information. So I'm going to end this with an opportunity for you guys to ask us anything. If you want to ask us something, if you're on mute, unmute yourself, state your name, and then ask us a question. If you are not on webcam, turn on your webcam because I'd love to hear you and see you. And I see Trace. How's it going? How's weather in Georgia? Glad that you're on the call. How can we help you?
It's actually just started raining the last 2 days again. So we've had a bit of lightning and what have you. But I wanted to ask a quick question. So my question is, we just hired my daughter into our company, and so we now have an additional workspace. I gave her my old workspace and now have taken over another workspace downstairs. So this happened after the summer. So because it's half year, do we have to adjust? Do we get to take it this year, or do we have to wait till next year? How do we do that?
Because I love Sabrina, I would like Sabrina to answer.
Okay, so my thought, Tracy, is that we will, technically have to account for the half year that wasn't happening. So typically what we would do is we would base that on, the number of months approximately. And then we would apply that to, obviously you're going to have all of your home expenses, and then you're going to have these two different spaces. And so we'll have one that is kind of, again, because it sounds like it was your previous office. So that one, technically you get the deduction the whole year, as long as there was no interruption to that. The space that you took over, you're only going to get the partial year for that. So we would have to kind of split it out and do it that way. But again, it's all the same expenses, obviously. So we just have to kind of separate it into those two different buckets. But it would be partial year for that new office that you took over.
Correct. So we have 3 spaces now.
Oh, okay.
That we're using. So there's my husband's, myself, and my daughter, and she's using it all the time. So yeah, that's what I wanted to know. I wasn't sure about that question, so thank you for answering that.
Perfect. I think that's a great question because it does happen.
Yes. Definitely.
Anybody else have a question, whether it's home office? Yes, Dr. Porzio.
Yeah, what is regular use? And why I ask this is, if you're working 80 hours a week and you spend 40 at your home, but it's 50%, is it based off of hours? Is it based off of percentage time? What is the gray zone? What is the hard number?
Renee, do you want me to say something on this? Okay. So that's a good question, Dr. Porzio. I mean, it's a little bit difficult to answer because just like a lot of other things, IRS doesn't really give us any concrete way of figuring that out in terms of number of hours. I think one of the things I would say is that given the type of work that you're doing, I mean, you're a doctor, so obviously you're going to have, patient visits that you're doing at your office, but then you have, and I think Renee touched on this, managerial work and administrative work that you're doing from your home. And that's one of actually the specific situations that IRS cites in the rules is that, if you are, again, as a professional, you're doing a lot of things in another office, obviously, but you are doing a lot of the managerial and the administrative work in your home office. So I wouldn't so much say it's number of hours, and Renee, feel free to chime in if you feel differently. I think it's more situational and the type of work that you do. Again, we talk about salespeople, other types of professionals that's just the nature of their work. They're doing a lot of the main bulk of what they're doing outside of the house in terms of, again, meeting with people, but they have all of the managerial and administrative, or maybe not all of it, but a lot of it that happens at home. And so I think that to me would be reasonable enough, but it really is situational, and it depends on the nature of your business too.
Well, we don't actually physically see patients. They send us the films, but
okay.
what I ask is more for other people in my group. I'm in my office, 95%. So mine's a no-brainer. But there's some people that drive into the hospital, some months it's, every day, some months it's half, so, it's varied from person to person. So it's bringing it back to the group and figuring out who can do what. So that's why some people work in the hospitals more, some home more. Because we have currently 4 shifts a day off-site from homes, and then on the weekends they're all off-site except for 1. So
okay.
It's more not for me. Mine's easy.
Yeah, yeah.
All doctors are created equal.
That's very true. I mean, again, Renee, feel free to chime in after I, again, kind of just reiterate what I said. But I do think that even when you're talking about those different, because you're right, not all doctors are created equal. It's kind of different. But I still, depending on the person, but I still think that I'll go back to what I said, that if there's a large chunk of, again, you want to say administrative or whatever type of work that's happening at the home office, I still think that will qualify. I don't think that the fact that they're, going out to the hospital X number of days is going to just qualify that. I think that that's a kind of one of those unique situations in the law that kind of goes outside of the regular box that we normally talk about. Renee, would you agree with that?
Yeah, definitely. And Dr. Porzio, I want to, talk specifically with you one-on-one with Sabrina, because your situation is different than most, because you have all the doctors in the hospitals and then you have home offices. So we will want to speak to you specifically of how we recommend that should happen.
So if I understand the one thing, the more admin work you do at home, the better.
Mm-hmm.
Okay. I think so. Yeah.
That helps me.
That meets the regular rule.
If it's set as a company policy, that would be advantageous to our convincing the IRS of the home office.
Yes and no, because the IRS has their own rules, but if you would have to come up with the policy, and I know you guys have been making a lot of changes the last year and a half, and so that would be something of how are you going to handle it for all the doctors, and what is your precedent, and then because we would help you make some recommendations based on what we could fight for you with the IRS and know that it was being upheld.
But I do think documentation is always helpful. So.
All right. Thank you.
What about business licenses?
Restate the question, Patty.
What about business licenses?
What about
office? Business licenses.
Patty, so one of the doctors that used to manage the finances in the group stated that it's null and void unless we have business licenses at our homes. And I talked to our attorney about that, and he said no. But what is your take on that? Because we cover the place, in Gilroy. So I know there we went, got business license, put it in the hospital. They require that, the hospital. But for our homes, I'm hearing no, and I've always heard no until that person brought it up.
So here's my 2 cents on a business license is I actually say, yes, you need a business license. It just increases your credibility with the IRS that you have a home office. In Morgan Hill, the business license is $20, $21. And then in San Jose, the business license is $151. And I will tell you, San Jose, I've had a friend of mine, I don't do her taxes, but she was contacted because she filed a home office deduction and a business business return, and the city of San Jose billed her for 3 years not having a business license. So the IRS is sharing this information with the cities. And so specifically, she was a sole proprietorship. And again, your situation's a little different. But I would say a business license is required in order to have a home office.
But the question I have though is, like, for me, I have a corporate office that is our corporate address.
Mm-hmm.
Now I go there, 5% of the time. That's not enough because I'm doing business elsewhere.
I would have a business license in both places.
Okay.
Yeah.
Okay.
So
Okay.
do you have anything else to add on that?
I don't think, the only thing I was going to say is I think it's a little bit dependent on where you are too, in terms of requirements. I think what Renee is saying is, if that's part of, whatever place you are, and I think, like you said, most of these places do have business licenses, it's prudent to get one. I think depending on where you are though, for someone who's maybe in another part of the country or another state, the rules may be different regarding what you actually need to have and what the laws are regarding business licenses. So I just wanted to add that to it, but I think what you're saying is correct. I would agree with that.
That is very true. And I would also add, how is the home office reported? Sole proprietorship is going to be reported on one form and it's very clear. But a partnership may report a home office through the K1 as another line item on a K1. So it really kind of depends on where the home office is reported. And again, we would talk to you about the best
we'll
way
talk about it. Yeah, there's a lot of nuances with this. So when we sit down.
Yeah.
Okay.
Which we're going to do very soon.
Yep.
Mm-hmm. Getting that on the calendar. Any other questions that I can answer? These are great.
Renee,
Yes.
Patty,
Hi.
what about a very expensive item that's in a home office, a very large expensive desk and depreciating, and who owns that, the company or the doctor, and recapturing if it's sold, all that?
That's a good question. Well, I guess my thought is that if the company is, reimbursing the employee for it, actually, I think that's a really good question. I don't know if it would fall into the depreciation rules in that case. That's a little bit different. And Renee, you can kind of add to this, please do. I would think generally, if it's something that the employee is purchasing, and we've kind of already talked about this, it would be, if it's a large item like that, it would be subject to depreciation, kind of like you indicated, Patty. It would be deducted over a number of years, unless it's unless we can take a excess depreciation under one of the rules there under bonus depreciation, or what we call Section 179. In some cases, you can fully deduct it in the year of purchase. But I think the first part of that is a good question, Renee. Do you have any thoughts on that? I don't think I've really run into that situation before.
I think my comment on this is through an experience with a prior client. He purchased paintings for his home office that he purchased from France. And I remember this was probably 12 years ago, 10, 12 years ago, and they were $7,000. And to me, that was lavish. And IRS does have rules about being extravagant and lavish. And, let me say it this way. A doctor might buy something more expensive because it's kind of ordinary and necessary for them, but I might buy a similar item that would be less expensive because it's ordinary and necessary for my business, kind of different based on the industry. But the IRS does look at lavish and extravagant. So Patty, if I can read between the lines, and hopefully I answered your question, does that help?
It
Yeah,
does.
that's a good point. That's a good point.
And it's all a matter of setting expectations for your workers on, what the company will pay for, what the budget is, what they have to cover, and maybe they file a home office on their, personal tax return. Because the home office for the doctors has to be convenient for the employer. in order to qualify. If it's not for the convenience of the employer, then there's no deduction. So something to think about.
Right. What about writing off internet? You know, one side of it is your home's going to have internet regardless. How do you deal with that as a business expense or not?
Yeah, that's a good one. That's actually a very, very good question, Patty, because it's something that we, I think, talk about amongst ourselves all the time in terms of how to treat that. Because with anything else, again, you're using square footage. That doesn't really apply to internet. And so I will tell you, for practical purposes, I've seen cases where it's part of the square footage, because there's no other real, I don't know, provable way to kind of show what's business and what's personal. I've also seen cases where there's an estimate, and we usually will ask the client, you know, we'll talk it out with the client of how much do you think is personal and how much do you think is business. Now, that's not really a great answer, but I think for practical purposes, it's really hard to nail that down unless you're, I mean, in terms of bandwidth and what you're using for business and personal, it would be really hard to kind of navigate that. So I think that the standard probably is, you know, again, either funneling it in with that square footage percentage or trying to come up with a reasonable percentage, kind of like if someone is using a cell phone for personal and business. It's kind of the same thing, where we have to sort of come up with what we think is a reasonable percentage to use. So Renee, would you agree with that?
Absolutely.
But on a foolproof method, and this is actually what I'm trying to pitch to everybody, is personally for me, I have a business line in the business name that goes only to my office.
Yeah.
And they're required by the contract to have everything up and running within 24 hours. Or the other line, it's, 3 weeks. So the bottom line is, that would be foolproof, correct? That you pay 100% of that, you pay 100% out of your other. Is that correct? And being that said, you guys said I needed to pay for it out of my personal account. I have a corporate credit card in which I put my internet line on. Does that qualify for that business account? Or do I need to pay with my own credit card?
My thought is it's better for it to, I think it's cleaner to keep it personal. Although, again, I think, Dr. Porzio, your situation is unique too.
Okay,
so I think that's
very specific. Wasn't this webinar about my group? Sorry.
We are special.
Yeah.
You are, and that's a good thing.
Okay.
I think it's we'd have to delve into that further, because I think it also kind of depends on the entity type too. I mean, I don't know, Renee, if you agree with that, but that I think plays into that also. But I'll just kind of reiterate what Renee said, that I think by and large, typical situations, it's better to have that all personal. But I think we need to talk about that more.
Okay.
And
Sorry.
they get reimbursed.
No, you're okay.
Because they are a C Corp, Sabrina.
C Corp. Okay. Yep. So that's a little maybe different.
Patty, you have been terrific in asking some great questions. I'm so glad you're on the call. Are you going to share your webcam? I know you talked to Jazz earlier. Do I get to see you?
I tried and it said all the webcam spots are full. I'm on my iPad. Didn't want to give up my big screens on my computer, and I don't have an external camera. So I thought I was being very creative and thinking outside the box to add my iPad. It's jerry-rigged up here in my office. You wouldn't believe.
No worries. We'll just make you do that when we have our team meeting with you.
We are looking forward to that.
Yes, I know Caitlin's coordinating all of our schedules, because Mimi and Sabrina are going to be on the call with you. So we'll look forward to that.
Hey, Renee.
And I were
Renee?
thinking about that, but we want a pre-meeting before the meeting.
Pre-meeting before the meeting. And you're going to have your webcam on. Yeah.
Bill, if that's
Renee,
what it takes.
Hey, Trace, go ahead.
Yeah, I have one last question. So about business licenses. So I've had business licenses in the past, and because of how everything's worked the past year, I haven't. If I go ahead and get my business license now, it should be okay, right? If I haven't done that. So as long as I have one for this year, it'll be all right.
Correct.
Okay. I just want to make sure.
Yeah. I'm going to pause for a few more moments. Any other last minute questions? Again, it doesn't have to be about home office. Got Nikki on the, I have Nikki on the line and she can ask you about, answer anything about QuickBooks, sales tax, payroll. We're here for you.
Ask your question.
Which one?
Zeros.
What?
Zeroing out the account.
Oh, okay, that is true. Yeah, you guys know we've talked about that, you know, we don't want to pay taxes on what is there in the account at the end of the year, but is there a way to carry over money? Because the first couple months are difficult because you're rebuilding up the account. And as you know, our payroll can be pretty hefty. And so is there a way to leave money in the account at the end of the year without getting that now lower tax, but that corporate tax?
Sabrina, I'm going to have you answer, but I'm going to tell you C Corp, professional service 2017, 21%, 2018. Go.
Okay, yes, on the percent, but I don't want to pay that. Is there a way to carry money over without getting taxed on it?
So I think the answer to that is probably no, because the key is that you're going to be taxed on the profit regardless. And I think when we had this question come up with C Corps about, is it okay to leave money in the bank account? It's okay to do. It's just like you said, people don't want to pay tax on it if they're not, you know, having access to that money. It's kind of stuck there for the time being. But it just goes, you know, kind of back to the principle of, you know, income minus expenses equals profit. That's what you're paying the tax on. And I don't think there's any way to get around that. Renee, let me know if you think of anything outside the box. But
I mean, there's the thought of deferring taxes, meaning deposit slowly and pay as many expenses as you can in December towards the end of the month. But that's really deferring the tax till next year. But
right. I mean, what we've been doing in the past, and now we've had to do it more, given that we have so many more people, is that we literally borrow from the pension money and put it right back in, you know, because we have until April to pay the pension. So what we'll do is we have that pot of cash we've set aside for the pension, and we just use that the first couple months until we build up our cash. Is that works, correct?
Renee, do you want to speak in on that? I don't know. I guess I don't know the whole situation with the money held aside for the pension, but I mean, I guess from a cash flow standpoint, that happens where, you know, you have certain times where cash flow is better than others, but I don't know if I can really speak on dipping into the pension funds. I don't know, and I think I'd have to know more.
The actuary on that pension account says as long as you put it back in by year's end, so we're literally in January, take it out, it's like it's never gone as long as you put it in by year's end. If you do not, then you get those penalties and fines. So we base it off of that.
I would say if the actuary is saying that, that's probably okay, but
it's great.
I'm sorry, guys. I have a new kitten, and I got it in Morgan Hill, and he won't get off of me.
That's horrible.
Cute.
I get him at that shelter in Morgan Hill, and he just will not leave. He's a love bug.
Aw, that's so sweet.
So cute.
But Dr. Poisio, that solves a cash flow. That's a solution for cash flow, and it's very fine. The thing that makes me anxious is, you know, it's risky, and it's just a matter of, do you guys feel comfortable in doing it? It sounds like you've been doing it for, you know, several years, and it's probably very comfortable for you now. But it's a good solution for a temporary situation to cover that. Yeah.
Okay. Thank you.
Absolutely. Well, thank you guys for joining us on this home office deduction webinar. We just want to plant some seeds, tell you that we appreciate you. Thank you so much for signing in. I hope it's been of help to you. And if you want to join us on the webinar for how to read and interpret financial statements based on your entity, we're going to go over that next month. Thank you so much for signing on, and we'll keep in touch.
All right. Thank you.
Bye.
Bye.
Bye-bye.